The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So as we start off the show, up 24 points on the S&P cash, Dow's up 210, NASDAQ up 99.33. As we said on Tuesday, I thought we were within about 24 hours of the low for the end of the year. We got kind of a little pullback, I think, because everybody was a little afraid at least what would happen in Congress. Of course, just moments ago, the House passed their tax bill. Now it goes on to the Senate, where they have to get rid of the cranial rectal inversion that they've had for, probably about the last year, and get on the stick if they think that they can go home without probably finding a lot of people with pitchforks waiting for them. But you never know what those guys are going to do. They tend to be very much like in Braveheart, all the nobles that, basically they kind of defeated the king and couldn't wait to stab William Wallace in the back as fast as they could. That's what the Senate tends to be like. So we'll find out whether or not these guys will try to rip defeat from the jaws of victory fairly soon. But my guess is they shouldn't go home to their home states if they don't get something done, or at least half of them get something done. So we'll find out. Maybe the fear of 3 market days down focused them a little on what they should be paying attention to and quit their petty bickering. But we shall not know. But anyway, we'll be on to bigger and better things. But now it's off to the Senate. And, of course, they always say that's where bills go to die. So we'll find out. So we still may have some action the end of this year. I don't suspect we will, though. I think just the last 3 days of the market acting a little weird was enough to, like I said, focus the minds of those senators that just don't like being told what to do. They don't understand they work for the people. They have a little different idea about how things actually work. So we've got that, but for the most part, that's kind of it. Now, when we look at volume on the day, it's kind of in line with what you would normally find a few weeks ago, but not the better volume we've seen over the last couple of weeks. We're still under 2 billion shares on the NYSE, which is for a 24-point move higher in the S&P cash, kind of light. Options continue to point to 2,600 for the expiration tomorrow, and it's not uncommon to see a big move on Thursday, to see a minor move on Friday as options expire. I was wanting to buy some stuff at the close yesterday. I did not. I didn't like the way that the market had closed. I certainly wouldn't have been short. The only thing I thought was that maybe we'd get an opportunity to buy a dip this morning. Never got it. I do have several long positions in both the newsletter, and I'm content to sit on my hands for a little while. We'll go through some of the other stocks that really popped today and why they popped, but kind of a decent lesson out here about not wanting to be short probably through the end of this year, and certainly don't be short any stock with fairly decent short interest. But we'll talk more about this as we move on.
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1904, John Fleming applies for a U.S. patent on what he called the oscillation valve, the first example of the vacuum tube. Vacuum tubes would form the basis of electronic technology for the next 50 years until the development of the transistor. Fleming's invention has been described as one of the most important developments in the history of electronics. And of course, if you're in England, they call them valves for this to this day, because they had the idea that electrons flowed like water and that you would just turn the valve on and off. But shortly we had radios built on valves, and the rest is history. I still never really, I started in the transistor days playing with electronics, but kind of in the last few years, really kind of come back to look at vacuum tubes and restoring some old AM radios from the 30s, which has been kind of fun. But a lot of things going on. Anyway, we had the Bitcoin webinar last night. It was pretty good to listen to it all. I got to ask a couple of questions at the end. It's always good to second check what you know. A few things I didn't know in that. I guess you can still get that. And of course, if you signed up for it, I guess you can listen to it again. Still worried for me. We talked about Bitcoin and Ethereum last week. There still doesn't seem to be a good solution to the part of Ethereum being hackable with the contracts and code embedded in them. They'll probably get better and better, but man, I've always worried about the one day where one person can blow up everything, because literally you can, and it has happened already, where all the Ethereum money has just gone to money heaven. And the question is whether or not they're going to fork Ethereum to get rid of a problem that they had last week. So as the host for that said last night, it is the wild, wild west. But what else do we have going on? That's pretty much it for the news. Wes, go ahead and start looking at some of the stocks that were moving as of last a little bit while. We've got some media stocks moving, not one that you would normally think of. Time magazine maybe getting a buyout offer. This is from a group of folks that want to be like Amazon and have their own newspaper so that they can beat people over the head with it at will. Apparently, this is kind of maybe a new thing that probably, like history, doesn't change much. But as we've said before, a lot of people think that newspapers and reporters are unbiased. The whole idea that there was that it was a profession run by people that were unbiased seems, in retrospect, to be rather laughable. Many newspapers of the day were named the Democrat or the Republican or the union leader to let you know that these guys had an axe to grind. Well, between the New York Post and the rest, Time's up for sale for somebody on the opposite side of the media spectrum. And of course, I'm sure we'll hear bloody murder over this, but guess what? It's time to buy a newspaper if you want your word to be put out with the rest of it. And that's what's going on with Time today. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And if you had a question, you can always email me at path@tfnn.com. You can call me at 877-927-6648. But the question was, why did I think that the bottom was coming in the market yesterday? And that's because basically the bottoms of the market have come in within 1% or so. For the last few years, when the summation index, the 10% crossed, or the 5% crossed down over the 10%, and I'm showing that on the screen right now. I guess I need to make this even bigger for this, but I can't. I'll have to modify my program. I do my own summation index with it zero centered. One of the problems with McClellan summation index is the number in the center here, that is the summation index of the 5 and 10% oscillator. It depends on where you start it. And one of the things you can do, or one of the things I do, is add a little gravity to the zero line. So if you run it long enough, it will come back to where zeros actually mean something. A lot of people don't know that summation index, the number has only to do with where you start. If you start 10 days later, it can be vastly different. So the zero, for most ones, if it's not somehow modified, they tried a different version of it a few years back, but it still has a fairly large bias to one way or the other, depending on where you start. That's actually called chaos theory, by the way. But if you just kind of nudge it back to every day, kind of nudge it back to zero, and you run it long enough, that all kind of goes away, and that's what I've done in my own version of the McClellan summation index. But as you can see, we got down fairly decently, but more to me, I could go back a lot further, is that when this has crossed below the 10% and the 5% cross on the downside, normally you get a fairly decent spike. Beyond that, we look at the options every month. I don't have a good options chart now for a variety of reasons that I need to get to this weekend. I can look at the raw data, though. It's pretty easy to show that 2,600 would be where as much of the puts that have been sold over the last 3 or 4 days will all go to money heaven for those people owning them. Especially big numbers like 2,600, 2,550. These things get pushed there because there's so many people that buy the century and even half-century marks on these bigger indexes. But 2,600 looks like where the S&P cash, not the ES, will look to expire tomorrow to blow away as much money as possible. So you can take a look at that. Okay, what else do we have? We talked about time as one of the bigger movers out here on a handful of people wanting to buy it for political reasons, I suspect. What else do we have out here? Cisco with earnings. This was the one that I worried about the most last night. Watching the earnings, this company, I was worried about its flagship routers, which have been under kind of price assault for a while. They make another kind of router, which is called an edge router that sells for a lot more money, but they don't sell as many, but the profit margin is huge. And that's what these guys were selling a great deal of. And they can continue on. But if this thing holds up here over the next few days, you've got a fairly decent looking breakout. And on a shorter time frame, this thing did test its previous low on much lighter volume back here on August 21st. The May 18th low had 85 million shares at $30.08. You got into that, didn't really break it, but if volume was down by 10 or 15 or 20%, I still want it to break it. But you had 85 million shares compared to 24 million shares. So, you were pretty much into that. It started moving up from there. You really don't need that $30.08 May 18th low tested in Cisco. I still think that there are so many people out here that want to sell Cisco with 5 billion shares outstanding that this one is going to be one of the hardest ones to move, even in a bull market. I just don't see the risk reward from the upside in this thing. Maybe it goes ballistic, but I have a problem with that. Another one in earnings that was a fairly big surprise was Restoration Hardware. This one looked at 44 bucks like it could go out of business in late August, actually August 29th. It came in and tested an 18 million share low from June 2nd with 770,000 shares. So talk about 1/18 of the volume. This did fairly well. The energy off this July 20th high. It was going into earnings. I liked the chart formation. I didn't like the earnings call coming up on the 7th of September. That's when this thing really popped, and you really haven't looked back. You're on your second gap on this one. And if we look a little farther back, this now has 2 big gaps. You're looking for one more huge gap, probably on the next earnings call for Restoration Hardware, maybe in the next 2 earnings calls. But this thing looks, and it got every sign when you get these huge gaps out here that you're going to probably get a third, and that would certainly keep me from shorting this. But a lot of this is the kind of stock I'm talking about where there's super high short interest, and I'm looking for these things to run to the end of the year. This one pretty much taking all the meat. There may be a little bit of gravy left, but I'm looking for more stocks like this that do not have earnings coming, that may get upgrades, but still have a lot of people that are very, very short this one. Now, this one did have a high volume low off February 7th at $4.60 that never really kind of got tested. it kind of had a very small test on about half the volume, but never really broke through. And no, it's done nothing but big ABCs up since then. What else do we have going on out here? We want to look at a few other ones. Some other media companies in the fray. Now that everybody wants to be somebody that can control the media, we've got Meredith Corporation, nice pop on this one with fairly decent volume. Looks like it's going to head back up to this gap at 63. Symbol is MDP on this one. Procter & Gamble, it's got that's P&G, is up 1%. Looks like this thing's still in play for some activist investors. You've got two gaps. My guess is that if you were long this thing, that you're probably going to see this thing up about 93 in the next week as it fills these gaps down. When it lost the proxy fight, or the active investors lost the proxy fight. So you've got a couple more bucks in P&G between now and the end of the year, too. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And we're back. As we said, Procter & Gamble up a little bit. I had a question about the art sale. Where's this at here? And it's Jimmy asking me whether or not I think that what is it, $450 million for the painting overnight is a sign of a bubble. Well, certainly we've seen that in the last few big blow-offs, is a lot of art going to the sky. And, 1929, the Gilded Age, same kind of thing. But you actually have the last great painting, I think, that you can buy and own. So that's kind of one of those things where literally it is priceless, but someone still wants you to put a price on it. The only thing I could really think of when I heard the news that they thought it would reach $100 million and it got $450 million was a little unknown movie called Amazon Women on the Moon. It was like 1987, I think, made by the same guys that made Kentucky Fried Movie, maybe the best movie ever made. Just kidding, but it's still funny. But the guys, it's from the same guys that made Airplane, if you like that kind of stuff. But they always had this one little part that I love, bad 70s and 80s TV, like just the really schlocky stuff that you see every day. But there was one little ad in there that made me instantly think about it, and I thought I'd play it today, and then we get on to some other charts.
For 131 years, this great institution has amassed what many consider to be the finest collection of art anywhere in the world. And now, it can all be yours. We've lost our lease. That's right. Everything must go. From the old masters of Europe to the conceptual artists of today's Soho. We're talking Rembrandts, Botticellis, Gauguin, Cézanne, Matisse, Renoir, and the chairman of the board, Leonardo da Vinci. This Egyptian sarcophagus from the dynasty of Ramses II, appraised at $14 million, our price, $19.95. Buy now and we'll toss in free of charge the original Declaration of Independence. Now you might expect to pay millions for this document that shaped a great nation, but it's yours free. This fine parchment will enhance any den or playroom. And you can have some fun with your friends by adding your own name along with the original signers. Remember, the Cosmopolitan Museum of Art. Every Van Gogh must go.
Oh, that always slays me. Every Van Gogh must go. It's great. The video's even better. But it's part of Amazon Women from the Moon. A great movie that they really kind of pushed late 70s, early 80s UHF television shows. Just a great ton of skits in there. Yeah, but we'll move on. After the bell tonight, we've got a few. I don't see a lot in these things other than probably slightly higher, but maybe we'll find out. Applied Materials, of course, a bad day to be short this thing. It's making a brand new high. Still no signal out here that this thing would break at any point. Decent volume going into earnings, but going to be tough to say. But the one thing you don't want to do is miss. So that is one of those stocks that, man, if it misses, it's back to $50 probably fairly quickly, 51, 52. So these guys better come through. Other companies out after the bell, the data mining company Splunk. We talked about how this one is very much like Data. Data blew up, which is Tableau software. These guys are the outside looking in. So the most vulnerable tonight in technology looks like Splunk. Applied Materials, maybe a little high, maybe a little low. I don't know what would cause them to lose huge. But if, these things are getting pretty much priced for perfection, so you want to look at those. A lot more interesting stocks are things like the Gap. This one looks like it could be making an ABC on the way down, especially these kind of traditional or older school retailers have not been doing well. This pushed a little bit back up in a expansion. This has done a 58% retracement. And ABC on the way down, if this thing misses, is $23.52. The reason I bring that up is even Best Buy came out and moved their expectations for Christmas down. And again, it's not so bad, $55. It got to $52.92 before things really turned around. My guess is this is still headed down to the 51 area. To say hello to its little friend out here from September 19th at 51.61. That order is probably somewhat level of success, but until Apple starts shipping iPhone 10s in some kind of volume and a decent profit margin for Best Buy, this thing had gone up thinking that they would have a lot of phones much sooner. It was much later, and of course, much fewer phones. So there just isn't a lot to push it. New 4K televisions just not really driving a lot of people to the market yet. There's just not that much 4K stuff. I had some people ask me what I thought about 4K, and the reality is that it's all about bandwidth. And for the most part, the bandwidth doesn't get any better with the for the content. And anytime things start moving, all they do is start compressing it back down to where it looks like HD anyway. So if you're looking at a lot of like golf shots and people are just standing there, it can be brilliant looking. But if you're getting your stuff somewhere besides a DVD player that does ultra high def, I just don't see what you're buying right now. We really need a lot more data to go across the lines. And most of these companies, data is expensive for them. And even though Amazon has it and Netflix has 4K stuff, for the most part, it may be 4K. It's just compressed back down to high def for the most part in any kind of moving action. And just, I don't see the reason of buying it for myself yet. When I start finding, maybe gigabit speeds to everybody's house, I think there's a much bigger case to be made for buying those. What else do we have? Okay, got to those. Another retailer after the bell tonight is Ross Stores. This one potentially could get up to 69.52. That's the November 22nd high. Anytime the market gets a little anxious, this store tends to do well. My guess is that it will continue to do well, and I'm looking for that $69 probably tonight. We'll talk about the reasons why when we come back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
In general here, and to me, especially gold kind of is the thing I'm looking at, and I suspect that this one will probably lead the rest from what I look at, but I don't spend all that time on commodities. I'm a much larger time frame trader than I think most people around TFNN are on gold. I keep looking for something that would be the next 7-year run. Haven't seen it. In the short term on gold, it's in a nice triangle out here with lower highs and higher lows. And until it breaks out of this one way or the other fairly significantly and does a head fake, about 80% of the time, that is when you want to take the other side of the trade. So if this busts out for a few days, I'll look at shorting this thing. If it breaks down, maybe back down to 118, 119, then I'll look at actually going long. But my guess is that this is going to break out. About 80% of these triangle patterns end up being the first move out of that triangle ends up being the head fake, and you want to buy the opposite side of it. So, maybe Andy, I've been asking Andy a question for a day. He doesn't think so, but maybe he'll expand on it with Tom O'Brien in the next hour. But my question is whether this IPO is over for the Saudis now that he's got half of them in the top floor of the Ritz. I don't think he thinks it's changed, but my wondering is whether or not the appetite for this is gone away with the thought that maybe it's kind of like The Godfather, where they were all down there trying to buy the get into the hotels, and Michael sees maybe there's something funny going on down here, and maybe we don't want to get involved in Cuba when it's going to get overthrown. But that would be my first thought when I see any kind of issues out here. He says the human rights violation or bad room service at the Ritz for the Saudis. But I don't know. If I was an investor, I would be thinking much more like Michael Corleone for the Saudis. But I don't know what. I've seen a couple articles that basically says the IPO is over, but don't know if that's true. Don't know how I would know that is true or false, other than maybe a little people getting cold feet out here. But maybe that's a good thing for the commodity discussion tonight at 5, or maybe with Tom O'Brien in the 3. About 3:20? Yeah, about 3:20 is when they talk about it. So let's go back and check into the market, which is already in progress over most of TFNN. We're up 24 points. As I said earlier in the show, options suggest that they're going to pin this thing right at 2,600 tomorrow. Nothing new. As I said, Tuesday, I thought we were within 24 hours of finding a bottom for the year. Options expiration, one out of 8, 1 out of 9 close below last Wednesday's high. So we're going to be certainly above that. So the only question is whether or not we get 10 more points tomorrow, or the market just kind of hangs around here. My guess is that we're going to, unless someone drops some kind of big bomb politically in the next day or so, I think they've only lost 1 senator. They can lose 3 more. Probably get the vice president to vote. So I think if we get that, there'll be a lot of yelling and screaming and people tearing their clothes and saying that one party is ready to eat small babies. But my thought is that I think they've woken up and focused since the market started moving down, when it started acting like they were getting a little cold feet. I don't think that the afterglow will wear off in one day. My guess is that we continue to move slightly higher through the end of the year. And like I said, I'm looking for something in the way of a huge move up or a huge move down, especially in gold, to set the hook either long or short. I don't understand being in it right now. Every time I've tried to pick a direction in narrowing markets like gold, I've always been bitten and on the wrong side. So I'd much rather wait until this thing moves and then apply a position. Walmart, talk about huge moves out here today. Again, we were talking about retail. But what is Walmart? It is the winner takes all in actual retail. And not surprising, these guys are the last ones there. Again, a handful of these stocks, people are getting way short. And part of the huge bump out here is that, but also the fact that a lot of people looked at Target and decided to jump all over Walmart thinking a similar thing would happen. But again, whether it's retail or online, if you've got a sector and you dominate that sector, it's kind of a winner take all, whether it's Amazon, Google in search, Microsoft in actual desktop PCs. If you've got a sector and you dominate it, all the money flows into you, and a lot of the profits do too. So going to be a little tough to figure out how you put a dark cloud over this, at least until the end of the year. Let's see, we have a few other things going on here I wanted to look at. We talked about IYT a couple of, what was it, 7-10 days ago. And I think this all started with Steve Rhodes talking about a reversal period back up here. It looked fairly decent that this was going to come back and at least touch this gap at 170. It did it yesterday. The volume was fairly light, 199,000 shares compared to this gap down with 98,000. Well, yeah. 98,000, actually the gap up. So that's the first bounce off these. The energy on the way up is about the same as the energy on the way down. So I don't see a lot changing in that one either, other than the fact that this thing did look like many other stocks, that the low was in for a while and we were ready for the bounce. What else do we have out here? I wanted to look at a few other stocks and hadn't looked at them for a while. O'Reilly Automotive. Wanted to see how some of these things were doing. Of course, these were some of the roadkill from Amazon. All the auto parts store when Amazon started saying they were going to get into same-day delivery of parts. And this is a huge margin business. This is what always bothers me about Apple and some of these other ones. If the margins start slipping, what can happen? This gap down on the 5th of July did so with almost 13 million shares. You're back into it with almost no volume up here on the highs. Could you get back up to 230? I think you could, but you have to look at these as fairly decent setups if you're thinking about going short, maybe at the first of the year. I don't think that there's going to be a lot of impotence as long as this thing's going up. You've already got through tax selling on these. So, you know, if there's a lot of shorts in some of these, you might see some nice moves in them, like Walmart, like Restoration Hardware. A lot of these stocks, people are piling on for earnings. Probably not a good idea. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
I had a question on whether I looked at the NASDAQ summation as hard as I did the S&P, and the answer is no. We've talked about this many times on the show, and that is if you want something that represents an index, 100 stocks probably not anywhere close. The S&P 500 is a little better. If you actually do the statistics, you need about 327 stocks to get a fairly decent look at the NYSE. So the S&P 500, pretty good sample, way above that 327. That gives you a confidence level plus or minus 5% at 327. At I think it's 387. You get like a 2% confidence plus or minus on the NYSE. So if you're really looking at the broad strokes of the market, 100 stocks in the NASDAQ out of about 2,700 stocks, not a good indication of the overall market. And of course, only 5 stocks represented 95% of all gains in October. So it was incredibly thin. But again, the same thing, you want to be looking for an opportunity, at least the last few years, when the 5% and 10% of the summation index has crossed below the 10%, you're probably looking at finding a low fairly quickly. But again, I like the NYSE. It seems to be a lot closer in time. And of course, with 500 stocks, tends to be much more accurate and unbiased as the NASDAQ does. So one of the reasons why I hardly ever talk about where the NASDAQ's going is it's very tough when 5 stocks actually account for 95% of the moves. So probably not a lot of cause and causation in those. What else do we have out here in the last minute? We're done already today. Anyway, we got earnings after the bell tonight, a little bit more tomorrow. But, just looking for a slow, gradual move higher into the end of the year. Don't see a lot of reasons to be short until maybe the end of the year. That's about it. In the meantime, sell when you can, out when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.